Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what's impacting mortgage rates, whether it might come from the economic calendar, could come from the headline news, or geopolitical combination. But really, what gets confusing out there is when market sentiment changes and good news is now bad news and vice versa. So we're here to try to give the explanation of what's going through investors' minds and what's driving these markets to doing what it's doing, and hopefully give you the information you're seeking. A little bit about myself is I am a loan officer. I do work with the national lender. We do loans in all 50 states. So if you're looking to refinance or purchase, we'd love to earn your business. So let's talk. But more than that, we like to be a resource for you folks. So if you guys got questions about anything, we're here to try to get that information for you. So without further ado, we'll jump right into it. Looking at the economic calendar today, the market will be closing a little early, 11 o'clock Pacific Standard Time. So we got a couple hours left here. I'm going to use a different economic calendar because this one, for some reason, does not show uh, personal income. So I like to show that. But one thing I will touch is on the consumer spending here today. We had one point the previous month, March, was revised higher from 1.1% down to up to 1.4%. Now, forecast for the month of April is at 0.7%, and it came in a little bit hotter at 0.9%, which is good news for the economy that people are spending money. So let's go to the other one I mentioned here, consumer spending, and then the other one is the other way, people's income. People are making more, hopefully making more money. So March it was increased a 0.5%. Forecast called for 0.5%, and it didn't come in quite as high as they had hoped at 0.4%. Um, so the one we're going to touch on right now, the next item here is what we've been waiting for all week. It's the big item here, and that is the PCE, or personal consumption expenditure. The core, when you strip out food and energy, is the Fed's favorite gauge, which is what they'll also term as real inflation. When you strip out food and energy, it creates it's a variables that they don't have control over, so that's why they kind of go ahead and uh, uh, yeah, uh, they don't have any control over, so they use that as their basis on there. Sorry about that. So let's start off with the PCE, the headline number. Its previous reporting back in March rose 0.9%. Month over month in April it only rose 0.2%. So a really nice number right there for us, since inflation's been very, obviously inflation's been a hot topic and sore issue for a lot of people here. Its year over year went from 6.6 down to 6.3%. Now, as we mentioned, the core it went from 0.3% with forecast of 0.3% and came in expectation of 0.3%. So it kind of moderated and came in at the basic expectations and same pace as it was before. However, its year over year went from 5.2%, coming in at forecast at 4.9%. So these are the probably least smallest month over month that we experienced for over the last year and a half. So this is good news. Again, uh, investors are hoping that we peaked in terms of inflation. So they're hoping that this kind of fits into what their narrative is, that maybe inflation has peaked. Now, could it pop up later on in the year? That is possible. So we'll have to wait and see. But for the time being, it does look to be uh, perhaps it may have peaked here. Last but not least, we will touch on I believe, consumer sentiment. Yes, here it is. Um, the month of May. So April is at 59.1. Forecast is supposed to maintain that same level. However, it did dip a little bit down to 58.4. So, all right. So let's go back to the market here. Uh, Market's down. It was up a little bit earlier. It's again trying to challenge the 50-day moving average. It's just a hair above it. Looks like right now we're at 100.38, and the 50 days at 100.34. So we're just slightly above it. So if we can maintain that, and hopefully even next week continue that, we could see a nice little breakthrough. So let's take a little better look here of where we are. Now again, we get these crosses back and forth, this little starry thing. So we were up a little bit better, but it's in a range where really rates should be unchanged. We're not really in a position. The reason being is that the stock market is up again today, so a lot more of the money is being flowed into the equity market where they'll get greater returns. Usually they move it over here as a flight to safety, but this whole week, for the most part, the stock market has been a positive territory, including the Dow, which looks like they will break that losing streak. But I think they had about eight losing streaks, which basically the longest we've had since 1932. So 90 years is a long time. So let's take a look at the volatility today. As you saw, we were down slightly, then we rose up, and now we're kind of back down again. So a little bit of a seesaw going on so far today. Uh, Again, we'll wait to see what goes into it. We do have a long weekend coming up ahead with Memorial Day weekend. So sometimes towards late in the days, sometimes money will flow over as a flight to safety over a long weekend, as people don't want to get any surprises over a long weekend. And well, this day and age, we do get a lot of surprises. So we don't know what could possibly happen. Euros are down. They're down to about 2.73 right now. And again, fighting its 25-day moving average, which is at 2.731, and we're at just a hair above it at 2.734 now. So again, it's trying to fight that floor of support here on the 10-year Treasury. So lastly, again, mortgage rates unchanged from yesterday, which is decent news. I mean, it's not better than losing. My concern was that perhaps it came a little hotter than expected, and so that's the good news. We didn't have a hotter PCE, and that's kind of what's dictating the markets today, stocks and mortgage-backed securities. But lastly, as I go back to, lastly, we'll look at the average rate for a conforming limit here in the U.S. These do have points built in, and they usually have a day delay due to the markets and stuff. So right now, 30 years looking at 5.25%, and the 15-year is at 4.72%. Now, of course, the 30-year, as we mentioned, that was already in the high fives just last month or earlier this month, and now has come down to the low fives. So we probably lost a good 0.5% in the rate, which is good news for those who might be looking to refinance or buy as a result. So hopefully that will help alleviate some of the pain that they were probably experiencing while they're in the process. All right, folks, if you guys, again, got questions or looking for rate quotes, whatever, we are here for you guys. Please feel free to reach out to us. We'd love to be able to talk to you guys further. If you guys like these videos, please help us out. Smash that like button and share. We greatly appreciate that. In the meantime, I hope you guys have a great rest of your day. Enjoy your long weekend. We'll see you guys on Tuesday after the Memorial Day holiday. Have a great rest of your day and week. Thanks for watching. Bye-bye.